All right, so welcome into the live stream today. We're going to have some fun. It's going to be a good one. We're going to dive into XRP, a little bit about what's happening in the market as well, what this might mean for a lot of different tokens. Obviously, XRP is on the front line of everything with some pretty big moves this week. We'll dive in deep. My name is Paul Barron. Welcome back into Tech Path. Of course, we're celebrating here today because Cardano has completed the fossil upgrade. So if you're ready for some wine, let's go and we'll just start chugging wine if you're a Cardano lover. If you are not a Cardano lover, then we've got whiskey over here for you guys. So either way, we got you covered. Yeah, we should probably get these guys to sponsor. Yeah, if you guys have ever heard of Treaty Oak, this is called Red-Handed Rye Whiskey. That's a good one. It's out of Dripping Springs, Texas. Not a sponsor, but we love them because they always send us booze, which we need sometimes. All right, guys, let's dive into a little bit of it. We're going to get into XRP. We'll do some charts, give you guys some sentiment data, all that good stuff. Some news did hit today that we'll get into, and I kind of want to run down on that. Before we get started, though, I do want to thank our sponsor, our real sponsor for today's show, and that is Bybit. Bybit, of course, if you're looking at going into next level trading, this is the place to do it. And there's some interesting aspects to it. They've got some cool things going on for this month. They're, of course, rolling into the ETH Trading Fiesta. It's a trading competition. They've got derivatives trading. They're doing 300K in USDC prize pool. They also have a derivatives pair with the 700K USD prize pool, all available, as well as an ETH perpetual airdrop if you deposit $1,000. The cool thing here is they do have a special rewards available for just our audience. So we've got 5 lucky winners. They're going to win $200 this month by clicking our link below, and then one person will win $1,000. So it's going to be a total of $2,000 that Bybit is giving back to our community in deposits. So very cool thing. They are going to announce the winners at the end of the month. So once we get those winners in, we'll announce them here on the show and let you guys know. They'll most likely let you know via your Bybit account as well. So make sure and hit the like button right now. That's the number one thing you can do to help not only the live streams, but also help the YouTube algorithm. If you guys were around on our 1 o'clock live stream, we had a really interesting conversation with Dr. Jeff Ross, and our stream got cut right as we were really starting to get into some of the deep stuff. And I think it was the SEC that did it, but I wasn't sure. I'm not really positive, but the stream got cut. And what we did was we pulled that together for you guys. If you want to catch it in its entirety, you can actually catch it on the audio version, the podcast version. We didn't record the back half of that show, but we got the audio clip, the full audio show for you, so you can go over to TechPath Crypto on any of the podcast apps and listen to that entire stream. He dropped some major bombs in there about what he thinks is going to happen with the economy. Some very interesting things around the Fed and in the aspect of whether you should be holding crypto, cash, commodities, and looking for what could be a major upend of the global reserve. And we talked about this on the show many times of what the digital yuan will do, how Bitcoin will play, and how the dollar right now is doing some very interesting things. Speaking of the dollar, this was also just a quick update and release. Many of you, if you're a Robinhood holder or user, you got a notification from probably within your app, and there is some pretty big news here with Robinhood. I want to get into a couple of things that I think are interesting that also apply to the crypto market, but more importantly, how to potentially earn some yields. And there's going to be some interesting plays right here. This coming in here from CNBC. Let me play this clip. Get some more
details on this 3%, but I'd love to come to this news at least that has not been yet shared by the SEC, but has been reported by a number of news organizations that the SEC will not move to ban payment for order flow. Do you have anything to share on that in terms of your understanding as to whether the SEC has reached that conclusion and or what it might mean for your business?
Great to be here. No, we don't. Obviously, nothing definitive has been released. We're on the lookout with everyone, but I do think that it's great news for our customers. Payment for order flow and the business model that we've introduced has really helped establish commission-free trading as the standard, and customers have never had it better for their investments. But what I'm here to talk about, as you mentioned at the beginning of the segment, is we're rolling out a 3% interest rate on cash for Robinhood Gold customers. As you guys know, that's a very high rate, and especially in times like these where inflation is high and interest rates are increasing as well. Banks are paying almost nothing on customer cash. So the 3% is 23 times what you would get from a typical bank. And we're excited to offer that to Robinhood Gold members.
So what, interesting frame right there with Vlad. The reason I played that clip was there's two things that it hit on. One was order flow, payment for order flow, which has been under the scrutiny of the SEC for quite some time. Looks as though there is some indicators, there's been some news outlets claiming that the SEC is going to let that go. In other words, they're not necessarily going to put a regulatory guidance on that. This will continue to, I think, push Robinhood to the front of the line in terms of how they're going to grow their crypto business. Now, what this may mean in the future is zero trading fees for crypto, furthering what they already do with zero trading fees on crypto. This may play into some very interesting scenarios for the exchange businesses as we start to play this out. The other thing that they're doing strikes a huge nerve, and that is this whole 3% APY for your cash. Now, these are cash deposits that are in your trading account within Robinhood, but they're gaining. So anything that's not deployed into a security. So the cool aspect here, obviously, is the fact that they're giving 3% interest rates on your cash, which he is exactly right. No banks are doing that. And in many cases, I wouldn't go to 23 times, but definitely a 10x. But the cool thing here is that their FDIC insurance is they're using some sort of layered effect. I haven't got all the details of it, but what it essentially means is that they're going to be covering way in excess of the $250,000 in FDIC insurance, meaning what you've dealt with on some of the scenarios, and of course we all know about the FDIC scenarios that played out within the Voyager case and also with the Celsius case. Voyager was interesting enough that actually I know cash holders that were holding US dollars in Voyager were able to recover their funds, probably because of the situation that they had deployed with banks. So I have a feeling that what they are doing is doing a sweep program into different banks, to which would be able to enable them to do some kind of roll up. So taking 250K of your, let's say you had those kind of deposits, most of us don't, but let's say you do, and start stacking those, much like you would do in different banks and ABA routing numbers. Interesting that they're going to be able to do that. So I think this may play into some interesting aspects of where this goes for Robinhood in their near future. Let's get into JP Morgan and Chase CEO Jamie Dimon, also with 6 other bank leaders. They basically got grilled by Congress. There was a whole scenario here where a lot of congressmen were basically trying to get into a position of understanding where the banks were in this particular case. And I want to show you a couple of clips here coming over from Senator Lummis. Let me play this one for you real quick.
Payments technology, for example, is far too slow and costly. So your bank is currently testing JPM coin. It's a type of stable coin for faster settlement. Could you talk a little bit about our duty to responsibly innovate, to stay a world leader? Same question to Mr. Cesare.
Yeah, I mean, America already is the world innovator and world leader, and China is a serious competitive strategic issue we all have to deal with. And so I totally agree with that. I don't think Americans should be embarrassed. I mean, we still have the most prosperous nation on the planet, all of the food, water, and energy we need, free enterprise, the gifts of God, the gifts of our founding fathers. They have autocracy, not enough food, water, and energy. They need 15 million barrels of oil a day. They get 4 from themselves or their immediate neighbors, stuff like that. We're in very good shape. The lazy part, talking about his policy, is things we got wrong, what we could have done better. Immigration, taxation, regulation, healthcare, litigation, all these things. I think it slowed down America. And I think we should all be focusing more, how can we grow more and create more wealthier, afford more military, et cetera, et cetera. And innovation in cryptocurrency, they're probably ahead in a couple of areas, and I think we should recognize that and combat that, and I'm not really worried about it as long as we get our act together.
Mr. Cesare?
I agree. I think one particular area of innovation that's critically important is money movement and payments activity. And I think the banks are working together with each other as well as our regulators on activities like real-time payments, Zelle, even FedNow. All those things I think will position us well for future payments activity.
So this was one piece. Now, Diamond was somewhat cool at that time. Further into the interview, let me play this little clip right here. And we'll go into this one.
Real-time payment system, the ability to get a 24/7 wire system at the Fed would be critical to it, and their new real-time system ought to provide.
Because they're talking about essentially XRP.
Payment system technology is the ability to pay on the weekends and move a substantial amount of money that actually clears. T+0 securities settlement would be doable if you actually could have the money move during the night. And so I think we're all aware of that. We've connected our real-time payment system. We're connecting it to other parts of the world that we've put together through the clearinghouse. That'll enable money to move real time. You connect that with Zelle and things, you can move it with no cost to another banking client, as long as someone doesn't step in and say, oh, that is not sufficient to have Santander in Spain. You do the KYC so we can rely on it. We need some enabling things. And I think if we do that right, we can take, you will see the innovation. This is already set up and already moving. And by the way, we move trillions and trillions and trillions of dollars a day very efficiently. So I think people's view of what's inefficient is kind of interesting, but you have to look at what really moves.
Well, we're aware that money was transferred in cryptocurrency as donations to Ukraine. They were spending it the next day. And if it had been transferred in US dollars, it would have taken about 10 days for it to reach. I see some of you shaking your heads. Disagree, Mr. Diamond?
Right now, we're moving $10 trillion around the world, zipping and zapping through AML systems, OFAC systems, regulations, AI systems, cyber systems, safely, immediately. A lot of it's real time. You're talking about retail payments.
Yes, I am.
Yes, and I agree with that. That's a thing that we all can work on and fix. But that's a very small thing relative to the other.
Okay, so
Thank
what
you
he
for being here.
basically was really kind of getting in on here was two things. One is the fact that the big banks really kind of understand their weaknesses and really what the opportunity really represents around what Ripple could be doing for the world banking system and how XRP could be utilized and Ripple Net could be utilized in a very positive way. And the interesting thing that Diamond had to say there, which I thought was a little arrogant at the same time, not necessarily fully, I'm sure he's fully informed, but what he's talking about is the upper tier of what's happening in the financial spectrum, mostly in nation state, definitely at high level government and large mass institution. And that is a large portion of how SWIFT operates, and yes, to a certain extent, they are correct with the exception of some scenarios in terms of time span when you get into cross-borderless payments. But in reality, enterprise activity, which he kind of quantifies as retail, is still a massive part of the growth of how crypto is going to be utilized and obviously how cross-border payments will be used, much less the retail aspect, which is just you and I. So I think a lot of this is definitely going in the right direction. The cool thing here that I think is intriguing is the fact that we have senators and congressmen that are actually asking these questions. So it is something that is in a good position, I think, for what's happening in the overall aspect of where not only Ripple is going, but also crypto in general. Still to the point is that, and this is something that Diamond, talked about in this same hearing, is that his theory was that Bitcoin is a Ponzi scheme, and his whole concept around other aspects of proof of stake were actually a more important route for cryptocurrency or crypto asset usage. Again, this gets back into the whole idea around decentralized and centralized use cases and how that might play out. So we're going to get into some XRP stuff, but the point is this starts to set a framework. And what I'm getting at here is you've got, operations like Robinhood moving quickly into banking style for the masses, because remember the demographic that utilizes Robinhood, a lot of younger millennials, Gen Z, and an emerging investment class. You also have a shift occurring that is really starting to make a unique position from all the major banks, such as JP Morgan, et cetera. And if you listen to our conversation earlier when Dr. Jeff Ross and I were on the 1 o'clock show, he got into a lot around how these banks could be running into a major liquidity crisis, which could represent some major downfall of major bank runs, et cetera. So the scenario is how do you secure against that, whether it's through crypto, US dollar asset holding, stable coins, all sorts of aspects that really kind of start to position us in a better, a better overall condition financially. When I look at XRP, there's a couple of things that play out in this. Obviously, the SEC sees this as a major threat. We obviously will have a summary judgment most likely here very soon. If you look at one tweet, this was one, and I want to get into here. It says SEC versus Ripple. This is by mid-November. We should have the motion for summary judgment fully briefed in front of the judge. Then the question is going to be, how long does the judge take to make the ruling? And Garlinghouse said, it could be 2, 6, 8, or even 8 months. And that will be a very interesting timeline, because the timeline there, in alignment with what's happening in the market, to whether or not we end up seeing Ripple getting, or XRP getting relisted. This will also showcase, I think, in a big way for what's going to happen in the digital asset space. So there's a lot kind of circling around all of this that will trigger other aspects of the industry. Now, granted, I'm still of the proponent that we are in a very macro-driven environment. We will continue to see some down pressures. Sure, we're going to see some little runs here and there. We might see a run back to 20K, maybe back above 20K with Bitcoin, possibly back up in the 16 to 2K run with Ethereum. But I think that, for the most part, we're going to continue to see this pressure from the Fed, from the tightening, and obviously from the market, which are these lagging numbers that kind of move in those directions. I want to look at the price here on XRP. This was just a quick rundown of XRP price, obviously breaking out. And you guys have been watching us talk about XRP. It has been climbing over the past week to 10 days on our sentiment chart. So it has been in alignment with what's happened overall within the market itself. But 25% rally, obviously everybody kind of is anticipating there's some big scenarios happening with not only the summary judgment, but also some interesting aspects around digital assets. And I'll touch on that, Matt, in a second. But currently XRP obviously reflecting a price near 25% gain, assets up 41% in the past month. And if you look at what Phelan talked about, this was September 18th, they filed a motion for summary judgment, which we know that's the legal process. That was pretty much what started the trickle down or the trickle up effect on XRP's run, because I think a lot of people are looking at this summary judgment as being somewhat the definitive nature coming in from the judges to set this course on a final act. And I think that is going to be a part of this. There is one other thing that I'll show you here later in the show that really could drive this even further, even though we're seeing some downward pressure right now on Ripple. And I'll talk about that in a second. Another thing that I want to jump into is this video right here. And this happened at Mainnet. If you guys follow Masari and Ryan Selkis, Mainnet is a conference that is going on actually right now in New York. I think it was yesterday and today. And Garlinghouse was there. They got into some interesting details. I want to break this down for you guys and let you listen in on this, because there's some very interesting points that Brad Garlinghouse gets to. Let's play this video.
Your take, in terms of ownership of XRP, Ripple has a disproportionately large share of the tokens. Would you agree with that?
Well, so today we own just about exactly 50%. So I kind of know where your question's going here. Look, even in the earliest days, you've been involved with crypto for a long time. What's the right way to do distribution?
I'm not coming at you the way that I think you think I'm about to. I'm asking, do you have a disproportionately large share? I think the answer is
we own about 50%.
Okay.
It's, as you know well, the vast majority of that, I don't know, call it 90% of that is in escrows. Mm-hmm. We can't control that. It's in an escrow. It unlocks once a month. We did this to kind of to eliminate the FUD that we somehow were able to control the XRP ledger. It's like, look, that's not true. But we do own roughly 50% of all the XRP. The other 50% is, float out and involved with various people, various projects, what have you.
Okay, so I would call that a disproportionately large amount, not by industry standards, but in general, if you're talking about a decentralized platform. What I think has changed in the last couple of years is more teams are starting with reserves. They call them token treasuries, whatever discovered assets, protocol assets, whether they're escrowed, whether they're subject to unlock, lock schedule, whether they're distributed to the early investors under a lock schedule or not. They're starting from no decentralization because it's someone's idea or some team's idea, and then they're gradually doing it over time. And you were definitely one of the first protocols, I think, that was disproportionately owned by one company.
Yeah.
And that's led to some of our disagreements in the past. But now it also is put you in this interesting position with the SEC, where the case that we are on the same side of, you can be, Ripple, the company, can play a meaningful part in helping force the issue and figure out what the definitions are and where sane US crypto policy should be. So I would love to just unpack the last few years of engagement with the SEC. Some of this you've spoken about, some of it I know you're going to be sensitive to, but you're going to be able to talk at a high level about this. What?
But just to touch on one thing you said, basically you can ask me anything because the vast majority, this is all public information.
If you're trying to settle, you wouldn't be such an open book.
We could talk about why we could or could not settle, but anyway, so your question is, you'll go back in time, like how did we end up here?
Yeah, so just walk through the genesis of engagement with the SEC pre-enforcement action, right? And let's catch people up to speed because.
So what Selkis is grilling, I shouldn't say grilling him on, is getting into this whole decentralized component, because as you guys know, saw right there, and we've seen this before, is that there is a centralized token position that Ripple holds. In other words, over 50% of the all XRP. So they obviously would gain huge benefits of this. He also looks at this as the scenario that we did see after the ICO boom of a lot of different teams and developers kind of going in this direction as, token treasuries, whatever you want to call it. The key there is it's not necessarily a security because it's not the typical way that you're offering this up, which goes back to the whole point of why they got into this in the first place with the SEC. Let me finish up here on what he's talking about.
People, you have to remember this was a point in time during the middle of the ICO boom. It was post-ICO boom by a year, right? This was 2020.
Well, the lawsuit was filed December 2020, 2 days before Christmas.
It was right before the changing of the guard of the Trump administration. But that means is there was basically 3 years post-ICO, which was a whole boom and bust cycle that existed years after Ripple had already began building with the XRP ledger, contributing to the ecosystem, however you want to frame it, right? But clearly you had been engaging for several years on this point as to how you should be regulated, what the rules of the road were, and how to think about these novel tokens. So just help people understand what that lead up looked like.
All right, so first of all, if you go back in time, I think an important factoid that most people don't recognize is, at the time we had our first meetings with the SEC, the market cap of XRP was greater than that of ETH. It was the second most valuable digital asset. And
I remember that because it was a straight shot down 90% the rest of the year.
Okay, interesting dig by Ryan right there. Number 2, over ETH, obviously timing here, I guess when 2020 Ripple gets delisted or XRP gets delisted, it just demonetizes the market as a whole, and obviously affected 70,000 XRP holders. All those kind of scenarios played into this. But interestingly enough, Brad Garlinghouse goes on to say here in the video is that when he went to the SEC for the first time, he didn't even take an attorney. They were not under the assumption that there was anything even remotely wrong here. So to me, this gets continued evidence that Ripple is in a position where I think the judge is also looking at this in the sense that it doesn't necessarily challenge the Howey test. It doesn't necessarily get into a situation where it has proven that we're going to see this going in a direction as a security versus just a digital asset that needs some governance. And even if it does get to a point where there is a potential scenario where we see a settlement, which he talks about further in the video, and I don't want to chop up too much of this because this obviously is going on live here. And it's a great video that was done by Digital Perspectives over there, so make sure and give them some kudos for it. But go check out that video because it does go into a lot of detail where Garlinghouse breaks down kind of the scenario of how this plays out in November, the likelihood, we will get a summary judgment in November, and then how this may play out in the next couple of months. There is some key things, though, that are happening right now that actually has a very key date attached to it, and that is an amicus brief that is coming into the judge that's already been approved by the judge to be filed. And this is done by the CDC. Now, it's not the traditional CDC that you're thinking of. This is actually, let me kind of zoom in on this just a little bit here. This is from the Chamber of Digital Commerce, which has been accepted. The court has, of course, reviewed the request and granted it. As you can see, the request is granted. And by September 26th, the CDC, Chamber of Digital Commerce, is going to file its brief. There is a lot going on with this too, and I want to kind of go down into a few of the details of this. One of them is right here. Obviously, the CDC, Chamber of Digital Commerce. It's basically, in essence, similar to the Blockchain Association. They're representing 200 of the world's leading startups, etc. But the fact that they got approved by the judge to actually present as a scenario because of the overarching reach that this has tells me that the judge is in full understanding of just how important this summary judgment will be. And I think that's why we're seeing the price movement. Obviously, when we see this brief come in, however the judge may take this brief in terms of consideration for that summary judgment, could start to play into some very interesting aspects of how the summary judgment might be worded and what kind of things we need to be watching for in the summary judgment itself. So lots happening out there around this. Another thing that they put in here is, given its position in the digital asset and blockchain industry, as well as significant advocacy initiatives, Chamber is obviously interested in the case, raises complex issues with potentially far-reaching consequences, namely whether the well-settled law applicable to the offer and sale of an investment contract that is a securities transaction is properly distinguished from the law applicable to secondary transactions in the digital assets where previously were subject of an investment contract. This statement right there addresses almost every altcoin out there, almost every NFT, all of the things that the digital assets commerce division talks about and not only advocates, but the point is the fact that the judge is allowing this amicus brief into her court. That to me is a big statement in the right direction. Now, if you guys are not aware of who these guys are, go over and take a look at this. This is just digitalchamber.org. They get into a lot of this, but again, this is very, pro Bitcoin, pro digital assets. They do a ton of, the top 200 is kind of their big thing, but they go into mining, digital tokens. They've got a summit out there. So they're definitely drinking the Kool-Aid. But the point is that we've got a federal court that is looking at something from an action committee and somewhat of an advocacy of the industry to be able to possibly affect a summary judgment. This is pretty big. And with this, it could really play into a benefit for how this plays out for XRP. So the real question is going to be, how does this affect the token price? And if you look at token price coming up over the next few days, this will be the question mark for sure, not only on Bitcoin, Ethereum, and even XRP to a certain extent, because if this gets in a positive light to digital assets as a whole, I think just in general, crypto probably will see an interesting little bump on this. I want to take a look at the charts and then we'll get into some sentiment. Just before we do that though, make sure and smash the like button. It is one way that we get feedback from you guys on understanding. Do you like these breakdowns where we do price analysis? Do you like some of our CEO or analyst interviews? We always kind of love to hear you guys' input on that. And the other aspect is we do a full lineup of our sentiment data, which you can catch our full CPI just by going to paulbaronnetwork.com, and you can jump into a lot of this stuff. Let me jump over to the price charts and we'll get into a couple of things. Obviously, Bitcoin kind of stabilizing right now here at 18.7. Sentiment was a little bit flat on Bitcoin, though slightly up. I was a little surprised on this right now, at least on our sentiment today. ETH was slowing on the sentiment. Obviously, we saw ADA really take a big pummeling right here after the Basel upgrade, or right about there after the Basel upgrade when it was floating at around 46. So a little bit of a downtrend there. I kind of thought we'd see a little bit of a ride up, but I wasn't betting on it. I didn't own any ADA, so that's kind of interesting from that. I want to take a look here at XRP. And you can kind of see this ride that I'm talking about all the way back to September 17th right here. This is when we started pulling positive sentiment on XRP, which is right there at a 43% run, literally in just a matter of 5 days, so 6 days. Pretty significant. I think this, of course, again, gets into the whole summary judgment component. The question is whether or not this can hold and continue a little bit of a mini rally, XRP being one of the big aspects right now. We will get into some questions for sure. I know we've got a poll coming up. Remember, when we do these market movers, the idea behind these are to give you guys some data, some insights, maybe even some of our own sentiment analysis. Not investment advice. This is how we look at it, how we play the markets, but hopefully it's going to get you guys going in a direction that matches up with your own portfolio. We'll get into some sentiment breakdowns here. And I want to take a look. And again, if you guys have not been in our CPI lately, We've added a lot of new tokens. So just a quick scan here. These are all the new tokens. VeChain came on, Hedera came on, Quant came on. We've added in some stuff over here on the metaverse side. I think Veracity was also added. Yeah, Veracity was added. Chili's was added this month as well. So there's quite a bit of tokens that we're doing full analysis on sentiment and amplification, which is essentially kind of a forward-looking sentiment analysis. If you're new to our channel, this is a tool set that we use all the time in tracking mainly how the market is, and when I say the market, meaning the voice of the investors. Because remember, with crypto, you don't necessarily have those fundamental analyses that you can do like a quarterly earnings report or things of that nature. Sure, you can look at on-chain data in terms of wallet activity and things of that nature, but you can't really pull together where the market is moving and how it affects price action without some use case of sentiment, which is what we do. So looking at XRP, let's take a look quickly right here. We'll jump into Ripple. And again, this is the thing that was interesting. Again, right here, 9.6, this happened right before we started calling. So this goes all the way back here when we were flatlining on XRP. Before the move, this is when we started seeing the upward trend beginning. So it was well before the actual movement of XRP. One thing that is very important is this red line right here is called amplification. This is a forward-looking sentiment analysis tool that we use along with our top line sentiment, which is kind of the general market sentiment, not the overall market, but the general market in relationship to that token. But again, amplification actually right here with overall market. Now, what we found is that any token that can consistently perform over the traditional market typically is showing positive gains. And obviously, XRP right now on top line sentiment, overperforming on the overall market, but amplification for the first time in a while, being able to actually start to track right here with overall market. So I'm watching this zone right here. Top line sentiment down slightly, which is typical of what we see, but amplification up just a hair. This is the one I'm going to be watching over the weekend. Now, we do drop these kinds of analysis in our mastermind. We try to do that 7 days a week. So that's for a little different group that we do here. But you can get to a lot of this data, obviously, just by subscribing to the CPI. Let's get into some questions. I know you guys have a poll here. Let's take a quick look at that. All right, so will XRP continue skyrocketing next week? So this is the big one, 62% saying hi. Saying hi, yeah, we're going to go there. I think the key here is the amicus brief that gets filed. It'll be interesting to read that because I think Jeremy Hogan Deaton will most likely do an analysis on that because it will give some new fuel to what could happen in the summary judgment. So very interesting stuff right now happening for sure. Let's get into a few questions and we'll kind of do a rundown here for you guys. Jerry Crosby coming in. Any thoughts on Sweat move to earn? All right, so Sweatcoin, we have not done a heavy analysis. My friend Rob at Digital Asset News over there, he's a big proponent of that token. If you haven't checked out his channel, check Rob out. He's got a full analysis on that. What I can tell you is that I like move to earn as a whole. Now, I'm always questioning any project in that space based on a couple of things. One, I do look at tokenomics to a certain extent because I think those are a little different in the sense of how metaverse and gaming, even though tokenomics matter, it matters to me, the community, adoption and partnerships. Those are more key because remember, these are most like, for me at least, more short-term moves, in many cases, maybe in swing trades. So I like move to earn as a whole. We haven't done a full analysis on Sweatcoin just yet. We are starting to look at it as a possible candidate for the CPI. We'll see how it goes. I mean, right now it's mainly through market cap and high volume of audience interest is the other capacity. The judge doesn't like the SEC. I would say that's probably true. Yeah, okay. And then man, you guys are just a lot of ADA people in the house, not happy with this Basel thing. Can you please, yes, I would love to bring David Schwartz or Garlinghouse on to talk a little bit about Ripple and kind of their initiatives on a global standpoint. We get a large amount of lead devs CEOs. We just had the Helium CEO, Amir, on. Check out that video because there's some interesting things that are happening with Helium that I think you guys should pay attention to. And it's an interesting token. I own Helium, but I'm more intrigued in the whole aspect of this network of networks. So there's some interesting things happening out there. But to the point, if you have a CEO of a reputable project that you know or on Twitter following, and maybe you're part of a group, just let them know. Just put it in there. I mean, we've in many cases, just by tagging me in our Twitter channel, Paul Barron TV or Paul Barron, we'll get involved and our team will start communicating and try to get them on the show on an interview. So you bet, we try to do that as much as we can. Colin, Paul, do you think XRP outcome could become a black swan or rally the whole community event? Okay, so I don't think that we see a negative view on this unless something really unusual comes out. The whole scenario of Hinman's emails and his preparation for that speech, the infamous speech, I think is still something that the SEC does not want to see the light of day. Because of that, I think either a settlement or a summary judgment will be in play. I do not think that we will see, first of all, the timing for this does not coincide well with what the macro events are. Now, it will have an effect on XRP because XRP's price, I think, is very suppressed. Just because it's not trading anywhere, it's impossible to get to, and you got a lot of demand for it. The XRP army is in full, and I think in other analysis, you're going to look at scenarios where this may have an effect for a short time on just crypto in general. The theory is that, crypto won against the SRC. For the layman, that's how they're going to see this. So this is going to be, I think, a little bit of a butt kicking for Mr. Gensler, which may end up getting him kind of finding a new career, as we say. Let us assist you in finding a new career. Hopefully that will be the case, and we get a SEC chair that can actually understand what digital assets are. Dean Carter, Paul, if you chose one, would you pick ETH or XRP? For me, that is a no-brainer for me. I would go ETH. Now, I do like XRP. I hold it. And it is something that I look at from an overall aspect of Ethereum and where it's going. However, interesting analysis of Ethereum is that with proof of stake, and even with the dynamics of the tokenomics of where this goes in terms of a deflationary arc for Ethereum, there could be some very interesting things happening with the Ethereum networks in the coming years. There could also be some opportunities here, I think, for other chains. This is something we've talked about on the show before. It also gets me to start thinking a little bit more about Solana, which is, you guys know I'm still a skeptic on Solana. But the more I see this moving in this direction, the more opportunities I see with Polygon, Solana, Polygon being the layer 2, obviously with ETH, but Solana obviously having kind of that scenario of what is, I think, a very competing opportunity, and possibly even more interesting projects that will continue to come out. Because remember, the bear run that we're in right now versus what we'll see in a bull cycle, we could see a whole new set of projects and tokens start to really develop, possibly tokens that you're not even watching right now, maybe down in that 3,500 range in terms of market cap. Christopher Hansen says, you said retail. I don't know about the poor. I don't care about the poor. I don't think that's, that's what he meant, yes. But retail, in essence, I also think is much more driven into 100 million and under businesses, which are considered small businesses in the United States and globally. I think that is a huge, huge market that is still untapped. Remember, these guys are moving trillions, hundreds of millions at a time. They are working in, the stratosphere, but not necessarily down to earth, which is where really the economy is run from. And that's the thing that I think affects and will affect these banks in the coming months and over the next year. I think we're going to see a big bank failure. We may see a bank run happen here in the United States for the first time in many years on a major bank. And we may be seeing a situation and a scenario, I talked about this with Jeff Ross, of a major G20 or G7 nation actually defaulting, which would absolutely upend the structure of the global economic power system as a whole, which means you could have crypto slide in as potentially an alternative to two other strengthening monetary global reserves, the dollar and the digital yuan from China, and possibly Bitcoin and others kind of go in there. Paul, do you think XRP will be relisted? Yeah, I think the minute that the SEC loses or a settlement or a court judges and says, hey, this is not a security, boom, we're going to see everyone out there, I think, rushing because there's too much pent-up demand for this. So these exchanges know the game. Should we take profits or hold till the lawsuit is over? Listen, I don't give financial advice, Mark, but I tell you what I'm doing. I'll give you my play. It's real simple. I have 3 different bags of XRP. I have a bag that is, I won't say the price, but it's well over the current price of the market. I have 2 bags that are under the current price of where the market is right now. I have 1 slot that I will probably sell a bag at around 60 cents. And that's just a bag because I'm a trader. I like doing these little slot trades and swing trades. That's a bag I would probably do that for. There are other strategies out there. People look at long-term holding. I will say this, that when this happens, the timing scenario here, because of the recessionary scenario, the macro pressures, the run that we would be expecting for XRP will most likely happen, could happen first, but I think it will happen into our next bull cycle, which means we got to hit that bottom. And that's the concern I have about all tokens right now. Yeah, lots of stuff happening around in Cardano. Would love to get your feedbacks on those for sure. You know, listen, it is what it is, guys. We always get the Cardano love or the Cardano hate. I don't know which it is. Why is Cardano just that way? I just don't understand it. It's just a token. It's a token. I know. Hopefully, we can all just live together in harmony. We'll use that as an outro. All right, guys, if you're listening and over on the podcast side of things, make sure and tune in over here on the YouTube channel. This is where we're going to do live streams. We'll do token analysis like we just did. We'll show you some sentiment insights to our own CPI. We do a lot of that right here, but it's a visual kind of experience. But, you know, if you are an audio guy and that's the way you go, excellent, go for it, man. We have 2 shows over there. That's Metaverse Insider and, of course, you know, TechPath Crypto, which you're listening to now. So just stay there. But if you really want to catch the full experience, get over here on the YouTube channel. Make sure and like the video because this is a key aspect to it. It'll help you get more of our videos, but also it'll help you get more education videos around crypto, blockchain, Web3, which I think is key for your next generational wealth opportunity. This time is like learning about the internet in 1997. Think about that if you were around in 1997 and understood what that meant. All right. Guys, if you want to reach me, it is out there on Twitter, @PaulBaron. We'll catch you next time right here on TechPath.